Welcome, welcome, welcome. We will be discussing a few things in terms of what's been going on this week, what we saw from FOMC, some of the things that we went over with SPX and ES for the entire week over the weekend. A lot of action has happened this week. 100-point ranges being traded on a daily basis. We had CPI, we had FOMC, and we've had some major levels break. But we'll get into all of that in just a second. All right, here we go. Now, as you can see, there's been a lot that's been happening this week. When we actually take a look at what we had planned for the week in terms of macro levels, what to expect in the weekly plan, we pretty much laid out levels that were here for weeks at a time. And by weeks at a time, I mean we are using weekly inside ranges that date back to October 24th that we still continue to trade in now. So if we take a look at this, during the weekly plan on SPX, I provided a few major pivot levels throughout the week. One of them was going to be 39.6182. This is a major level that we broke to the upside, and as expected within the plan, we had seen 40.28, which was my top level for this breakout. Due to CPI, we actually saw much more than that. We filled the gap again. We retested the previous gap fill to the upside, ended up doing a double top, and gave everything back the same day. Leading into FOMC, it was a little disappointing. We were all expecting some type of action, at least 100-point range, bi-directional. But most of the time, we actually just got chopped post FOMC. You had this bear flag that formed into FOMC, tested the top of the trend line, dumped right into FOMC, and continued into new lows on the day. So I think there's a few factors that go into this. One of them is because the 50 basis points were kind of priced in. But I think more so is the fact that this FOMC, they came out even more hawkish. Yes, they may be slowing down the pace of their rates and the amount that they're increasing it from a quarterly basis or a monthly basis. But the bigger thing was that they actually increased their projections. So although they're slowing the pace of the rate hikes, they're actually projected to do more. And that's what really caused the downside movement post FOMC. Very, very hawkish result from that. And essentially, we've been trading in this humongous, now almost a 200-point range, over a 200-point range from the top on Tuesday to today's low. But if you guys actually take a look here, it's pretty textbook. More so the fact that we still have these bear flags that kept playing out and playing out. By the time I gave you guys this analysis, we were trading here, which was Friday. This was Friday's close. We formed a bear flag right into Friday's close that we closed right above. Ended up bouncing on Monday. We broke this 39.6182 key pivot, which led us to pump all the way to 4,100 again on SPX. Now, when you are using these levels, for example, a 39.61 pivot towards the upside, I have a target of 40.28. These will all become your supports or resistances, or vice versa, depending on what side they're trading on. So, for example, let's say we broke back down below 40.28. What's your next target? You're looking at 39.61 again, right? After FOMC yesterday, we gapped down into this bear flag again, and we immediately dropped from it. No bounce whatsoever, no gap fill. Now this leaves us trading right back into the gap, and you guys know I personally hate trading in gaps because it becomes very volatile and very choppy, which is exactly what we saw previously. So now that we have traded back into this gap, okay, we now have a gap to the upside, but more importantly, we still have the gap to the downside by 3,800 that we still haven't filled yet. And that's the one that we're really watching out for. Okay, so when we're taking a look at SPX today, the pre-market plans I've been giving you guys on a daily basis has pretty much been, look, we break below certain levels, we're going to see 3,900 again. It's been the same theme for 2 weeks. We finally got the move, breaking 39.6182. Told you guys in the morning, below that, short everything. Okay. The next key pivot that we saw and planned out for the week was the break of 39.06, 39.05 on SPX. This is also the weekly inside from 1024 breakout to the upside, and also 11.13 that week, which was acted as support. Broke down with heavy momentum on it today. Pretty much the entire day was bear flag after bear flag. Okay, you guys can see it right here. All right, bear flag, bear flag. Okay, everything was bear flagging throughout the day. So this was definitely just a seller's momentum day. There was no real safety net for bulls. And once we got down to this 39.05 level, once we broke, we dropped an additional 20 points. What happened during the last power hour or closer to power hour, we saw a pop. Now, what happens when you take a look at this? Let's say you're trying to take calls on SPX and you found the bottom here. Your target is going to be that same level that I just broke down from, 39.06, 39.05, right? That was your previous support, which has now turned into resistance. So this is going to be moving forward for tomorrow and for the rest of next week. This is going to be your major pivot level now to the upside. Okay, if we are able to reclaim 39.06, 39.05, we should expect to see some momentum to the upside. Probably a dead cat bounce, probably a retest of this bear flag that we broke down from, which, by the way, can still be a bearish retest. So these are things that we're watching out for. Now, for the downside, we're looking at 38.64, which is your first downside target. We break that, we're filling the gap all the way to 38.18. All right. So these are the plans that were laid out this week. So far, we've seen everything play out. We've had a phenomenal week. Many baggers given out. Execution was great. So what I wanted to do now is actually take a look at some opportunities that we can find for tomorrow as well. All right. Now, if we take a quick look at ES. Now, as for ES, my levels don't change. Although I am on a new contract now, since ES1 has already rolled over to the new contract. Levels don't change. Okay? Same levels, just at different prices now. What I mean by that, 39.12 was before, on the previous contract, like 38.75 or something like that. Okay? And 39.12.50 is also a major level that I've been giving to you guys for the past few weeks on ES. We break that, which is also the weekly inside. We're going right back to 38.50 or more. So these are things that you guys should be watching out for the next couple of weeks. Everything else is pretty textbook. We've already broken this macro bear flag and rising wedge that we built from the very first low back in October. Okay, this range, these bear market rallies, it kills people, right? Because you start trading in this humongous ranges, and with every range, it expands. Okay, so sometimes you're trading in 150 point ranges within a week. Sometimes you're trading 200 point ranges, like we've seen in just a matter of 2 or 3 days. So these types of bear market rallies are meant to kill people and get them out of the trade, get them sidelined for as long as possible, because they'll get killed on both sides of the trade if they're not careful and if they're not pinpointing exactly where they need to execute. Okay. So I'm going to use my clean chart now just to take a look at some opportunities, and then we can go from there. Actually, let me use here because I do want to take a look at Tesla. Okay. I want to take a look at Tesla here. I've kind of been watching Tesla all day. We took a few trades on it. This 156.91 level is extremely key for Tesla. And this gap down at the bell and immediate pump represents a lot of momentum for bulls. The fact that we reclaimed this area, this level, and we've held above it all day says a lot about this, especially in my opinion when SPY has been dumping all day long. Now, if you guys have noticed, Tesla has had a mind of its own recently. It hasn't really been following the indices. And of course, Elon's been selling a bunch of Tesla shares recently, so you can expect even if SPY is bullish for the day, Tesla's not really following through because of that reason. All right. My longer term target for Tesla is actually looking at the 141.75 area. I've had this level marked for a while. You guys can see this little clock symbol on it represents that I've set an alert when that hits. But that's what I'm looking at for now for Tesla. In the future, depending on how bad this bear market becomes, you can expect lower. But for now, I think that is a great area to pick up shares if you don't have already, or even add to your long-term shares. Now, short term, and by short term, I mean tomorrow into early next week. I do think Tesla has an opportunity to reclaim 160 pretty quickly, and make a move back to 165, 167.50 within the next couple of days. So I'm going to keep this on watch for tomorrow for 0DTE. Tomorrow is Friday buy day. It is our favorite time to trade, favorite day to trade. So this is definitely one of the things I'll be looking at. Long as it holds above this 156.91, I mean, my bias is to long, right? We need to get over this 160 area. 159 has provided a lot of rejections today. So these are some of the levels that you want to look at. Long as we stay in this range and we don't break below 156.91, you can at least test the top of the range at 160 and then go from there. But personally, I do expect a nice move in Tesla pretty soon. Let's take a look at Amazon. So most of big tech actually looks terrible on a macro time frame. I don't know if you guys remember when I first shared the monthly chart on Amazon. There's still more room down to go. The area that it's in right now, this huge zone here, should provide some relief for Amazon. But if you just look at the momentum on this, I mean, Amazon has closed red 5 months in a row. Well, the summer's not done yet, but I'm pretty sure by the end of the summer it's still going to close red. So Amazon has closed red 5 months in a row now. Okay, half the year it's been bearish. So these are some of the things that you need to watch out for. I do like Amazon for lower targets on a midterm time frame, and long as it holds above this 88 area, I do think that it can provide some opportunities for the call side. Okay, Amazon is also starting to build this huge range here, using this 88 as a support. So something to watch out for. Your upside pivot and upside resistance is this 89.62 area. Okay, so this is essentially your range right now. Semiconductors. Let's take a look at semiconductors. NVIDIA has traded back into this rising wedge that it broke out of due to CPI. Okay, so this is essentially a macro. What you're looking at is a macro fake out here, and this is exactly what's going to kill breakout traders, especially if they didn't sell that morning. All right, but NVIDIA is looking like it wants to test the bottom of the range again. It did hold the fibs. So short term, it can provide a bounce back to 172.65. But looking at midterm, I do think that's probably going to come down to 163 again, 162, once it's all said and done. Another thing I'm looking at is BA. BA is a big one. We took BA for 100% today. I think those contracts went over 150% by the end of it. But BA is something I've been waiting to short for the longest time. I mean, you know, before BA started breaking out and doing this parabolic move, BA barely ever sustained any type of bullish movement. It usually gives it all back. So BA had a couple of headlines, other companies ordering the 787s and things like that. But I do think that the top for BA, the short-term top for BA, is in for now. So I do expect a retest of 180, possibly a break back into this range here that we broke out of. So if we take a look at my levels here, I mean, you know, you're looking at a lot of different bear flags forming around these levels here. This one I believe we just broke out of today. Yep, we just broke out of this one. All right, you're seeing a bearish divergence here with that and RSI. Yep, there you go, bearish divergence there. So these things are starting to play out. And although we killed the day trade on this today, I really did want to take a swing on this for probably 12:30 or into January 20th monthlies, just to be safer. But we took 180 puts today at 40 cents, sold all the way up to 80 cents for 100%. I do think that BA has more room down. Probably reject this area here, this bear flag that it broke down from, and let's see what happens from there. 186.65 is a pretty key level. It's the exact same level that we used this morning as an entry for the puts. So long as it holds below this, you know, I can definitely expect another $8 to $10 move to the downside. Another one I want to look at is CAT. CAT, same thing. CAT, I believe, is pretty topped out here. Sorry, some of the other stocks look like this as well, building the structure up here. And if I highlight this, okay, we took a look back further. Not the best looking chart for continuation for new highs. All right. You have multiple gaps to fill on the downside, especially from that ER gap. Bear flagging here. Okay. So you kind of want to wait to see what happens here. I do think that CAT is in for a pretty big retracement, same as DE, but I do believe DE had already started it. Yep, you'll see here. So these are some of the things I'm watching as well. This one is more midterm, not really a 0 DTE kind of thing, but something to watch out for swings. Okay. Same thing with TSM. TSM is something that I've been watching. I've been waiting to get into puts. Completely forgot about it, but essentially the same type of structure. Bear flag right at the end of it before it starts breaking down here. TSM as well has a lot of room. Multiple gaps. 1, 2, 3, 4. 4 gaps to the downside that it could possibly fill. So this is also something I'm watching for short term. All right. Let's take a look here. Baba looks pretty bearish as well. Might be a great 0 DTE trade tomorrow, as long as it holds below 86.42. Now with China reopening, they've had a surge of cases again, just due to the fact that, I mean, it's pretty obvious, right? You keep people locked down for so long, they don't get to see anyone. They're not spreading germs to each other, which we normally get anyway from just going out and like being outdoors. So now they're having a surge in cases, obviously, but they finally reopened. In terms of representation of that in stocks, you don't really see it, right? But I believe it's also been priced in because Baba has been on the same pump, you know, for the last couple of months or so. Ever since the low, I mean, Baba's up pretty much almost 100%, like just about 80%, you know, from the low to the peak. So if we actually zoom out here and I extend this bear flag that we broke down from before, you're also looking at a bearish retest right into the trend line. This top right here on December 13th on Tuesday, we hit the trend line to the T and rejected it. So now you're looking at that bearish retest play out to the downside again. So we fail to hold this 86.42 tomorrow. You can probably play this down even further to about 84, 83. Yeah, 85, 84, 28, 82, 53. This can definitely provide a pretty decent move for 0 DTE, and we'll have to see what happens with the rest of the market. But on the flip side, if we do end up holding 86.42, this is also going to be your pivot for the upside. As you can see, this is pretty strong support as well. Every time we tested near this area, we bounce. So far, we're kind of back testing it again and breaking down. So this is basically going to be a pivot level for both sides tomorrow, depending on where we close, whether above or below. All right. What else I typically play? Google. Google was one today. Loved Google puts. Missed it today. Missed a lot, actually. I missed the NVIDIA puts that I gave on the watch list. Google puts I missed. Google has a downside gap that we can fill as well. Also has a pretty decent support level here right at this 90.38. So another thing to watch out for. But again, all of these levels, you'll notice that these are a lot of things that we've looked at so far. They're trading literally at pivot levels. Very key pivot levels. So the reason why I mention that now is because you kind of have to pay attention to this, the weekly levels I gave on SPX, okay? If we're able to hold above 39.06, 39.05 tomorrow, my bias is likely to look for longs. Long as we hold above that. If we continue to reject that and do bearish retests on it, then you can likely continue shorting everything. So this is what I'm watching right now. I'm still biased towards further downside movement, but due to the fact that we've had such a big move just in the last couple of days, you know, literally over 200%, over 200 points from the top of CPI in 2 days, I wouldn't be surprised if we have a choppier day tomorrow and things don't happen until late afternoon, especially considering tomorrow's quad witching. So that's one of the factors that you have to take into account. If we end up trading inside candles tomorrow, I would not be surprised, and they might just have save the big move for the last hour, leading into the contract expirations. All right. A couple more things that we can probably take a look at here. PayPal, for example, looks terrible. PayPal is about to break its previous low and probably head into. I mean, there's a lot of room down for PayPal. Let's be real. Leading all the way back to 2017, there is a ton of room down for PayPal. So definitely something else to watch out for on that. This whole thing, I mean, we can definitely see PayPal retrace at the same trajectory again. It's definitely a possibility. So keep an eye out on this one. I think PayPal might be a big mover in more of a macro sense. Square, on the other hand, has actually looked better than PayPal has recently. I've noticed they haven't really been moving in tandem. They used to. PayPal and Square used to move in tandem. But recently, Square has just fared much better in terms of price action and where it's sitting at the chart than PayPal. So this whole range here, you can expect Square to do something similar in terms of building a consolidation area. And this can happen for months. You'll take a look at this volume. I mean, you see here, there's a lot of accumulation happening. When you compare the volume happening in this range versus everything else before that, right? So something to keep an eye out for. If it continues to hold this range, I do think that it's not a bad pickup for shares. I like Square. I don't really think they're going anywhere. Their business model is still great. People still use it. So in terms of options, the bottom range here is essentially your support. Swinging wise, don't really see much opportunity currently, depending on the rest of the market. But, you can likely see at least this range being tested again. All right. And you have your bottom support range here. So these are essentially a couple of levels that you can look at when it comes to looking at swinging Square or even taking day trades, things like that. But yeah, huge dump. So tomorrow we have to see whether or not market's going to provide a relief bounce, and if it does, how big, right? That's pretty much it. Let me take a look at some other things. UAL. Yeah, travel doesn't look that great. Same thing with UAL. UAL is about to break that gap again and probably fill the gap around 37. Banks, not looking too hot either. BAC completely drilled back into the range. This structure broke out of ended up being a fake out up here. Right? Ended up being a fake out, retested into the range. So, not the best looking charts in terms of more of a midterm to long-term view on things. Take a look at GS. I mean, they're disgusting, BAC seems to be the bad apple in the group because BAC actually started dumping way before the rest of the banks did. So, GS actually hasn't really broken structure yet, right? If it ends up holding this trendline breakout, this could still be a bullish retest. Once that goes, like BAC did, then it's gone. But as for now, GS doesn't look as bad as Bank of America does. Bank of America got completely destroyed, right? When we added Bank of America to the watch list that week, I wanted this area to hold. Whoa, sorry. I wanted this area to hold. Never held. And completely drilled right back into the range. All right. So because of that, I never took any positions on the calls once it broke down. And then even if we take a look at JPM, same thing. JPM doesn't look as bad as the other banks. So some things to consider. This might be a lagger. Long-term view, not the best looking chart still. Just a very disgusting range, right? Very disgusting range. Let's see if this ended up being a back test to that. Whoops. So this is essentially the bear flag that formed from that. We broke down, bounced a bit, then broke down. Now what we really need to get above, for anyone to feel bullish on this, is up here. All right, long as we hold below 140, I mean, it's not looking good for JPM. Take a look at Apple. Apple looks disgusting. This is so bad. You got huge bear flag playing out here. Okay, I mean, this does not look good at all. Yeah, Apple has a pretty good chance of retesting sub 130 again. Yep. This could be good for 0DT tomorrow too. You guys should have my Apple levels as well. I've shared this a few times. If not, I'll share it tomorrow. But lots of these things are getting to the bottom of the range, and it's at a point where it's make or break, right? When it breaks, it's going to break hard. If it doesn't, then it should provide some relief. So that's what we're looking at with most of the market right now, especially with the dump that we've had the past 2 days. All right. Awesome. So, like I said, 3905, 3906 is going to be your level tomorrow. Long as we hold below that, you can continue shorting this. All right. But if we're able to break back above 3905, 3906 here on SPX, you're looking at a possible relief bounce. But as long as we hold below it, you're looking at 3864 again, and then the gap fill at 3818. Whether or not that happens tomorrow, I mean, with quad witching, it's definitely a possibility for us to drop another 70, 80 points in a day. But other than that, you know, we have to see what happens in terms of how they close the week. Like I said, I remember last year we didn't really have a Santa Claus rally, and I don't think that's going to happen this year as well. We might get a couple bullish days, but nothing like what you would typically expect in a Santa Claus rally, where everything just flips green. You know, we're down 200 points from the high from CPI, and it's going to take a while for us to get back there especially with so much resistance to the upside now. So downside probability is still higher for continuation, but trade it day by day, level by level. You know, your style with day trading is obviously different than what your outlook is when it comes to swinging. So you have to adjust accordingly. Cool. Thanks, guys. If you guys have any questions, feel free to ask me.